if you look at the markets, I think markets were worrying about many of the macro issues which had become headwinds. For example, crude prices were moving up very sharply, which had an adverse impact on our current account deficit as well as our currency. We also had a scenario where people worried about building up of inflation expectations and hence the future interest rate scenario. And there were also noises around trade tariff wars. I think in the last 4 or 6 weeks, clearly many of these issues have turned favorable for our country. Crude has corrected sharply to about $60 to a barrel now. We have seen currency stabilizing around 70 rupees to a dollar. There are no interest rate worries as of now. We have seen comments from the Fed meeting. We have also seen our own inflation numbers, which also suggest that we are in an extended pause and unlikely to see higher interest rates. We have also seen some resolution of trade tariff related issues, while they may still continue to come back and haunt us at a later point of time, but right now they seem to be kind of giving some calmness to the markets. With all this, we have also seen the second quarter earnings giving a reasonable degree of confidence in terms of mid-teens earnings growth for this year, and also better earnings growth for financial year 20. And with valuations coming off, we can really make a case for equities giving one of the better returns among asset classes in the next 12 months as well as beyond that. Our advice to investors would be to look at investing in equity when there could be volatility in the shorter term, because in the short term generally liquidity and sentiments drive markets, and with political events around the corner there could be heightened volatility in the markets, and one could use that to build a portfolio from a longer term perspective and benefit out of that. So that would be our advice to investors. Make your asset allocation, be disciplined, and make staggered investments during this volatile period.